evening, everybody. Coming to you Monday night. Luke Gromen, founder and president of FFTT, Forest for the Trees. Glad you're joining me tonight. Hope everyone had a great long weekend here in the United States. Wanted to run through quickly a couple things that grabbed my attention recently. Going to jump right into it here. First thing was that Schlumberger last week said that they expect U.S. shale drilling activity to be flat to down in 2019. That is a potentially important data point as it relates to broader industrial indices in the U.S. and in particular the U.S. ISM index, which of course then ties in a number of other monetary FX rates, etc. The bottom line to it is that U.S. shale related activity has been punching above its weight for a number of years, and certainly in the last year. We've highlighted that a couple times, but I think it's a really important data point. That's going to be a real headwind to the U.S. ISM, U.S. industrial indices, and as a result, broader economic activity in the U.S. That's something to watch. What would change that would be as if oil prices continue to rally from here. The second thing that really grabbed my attention recently, I'm going to read from this because I want to make sure I get it. There was something I retweeted late last week from Harald Malmgren. He said, "Our economy is just at the initial phase of financial decline, revealing entrenched recession in coming months. There will not be a V-shaped recovery anytime soon. Path may be one of falls followed by weak bounces, but basic trajectory is downward." So that is my present view. To me, this was a very important tweet from Mr. Malmgren. If you don't know who Harald is, he is, by way of background, started his career with the JFK administration back in the early 60s. Was with a number of presidential administrations in senior roles. Harald is he has a contact base befitting a man who's been involved in around Washington at high levels for over half a century. He's a brilliant man. He is a gentleman, and he's someone who is like I said, very well tied in and not prone to making comments like that. And it's importantly, this was merely the latest in a series over the last couple of weeks of tweets that were, quite frankly, grabbed my attention by how firm they were, or by how stark the warnings were, which, coming from a man like Harald, to me carries a lot of gravitas. And so I would highlight that as something worth paying attention to. I think there are a number of potential reasons or things that he is highlighting, and a number of factors feeding into that. But those are the two things I would really highlight for you this week. So before we jump into a few questions here, hope everybody's doing well. Hope football games worked out well for everybody yesterday. Congrats to my friends in Boston, as well as to out in LA, and my condolences to New Orleans and to Kansas City. I know I've a number of friends in particular in Kansas City. A lot of people out there I know I called on there for a long time. So unfortunately, being a Browns fan, some of the things that happened in particular to the Saints, those are things I thought only happened to Browns fans. So at any rate, I'm going to open it up for questions here, and as always, if you want to know where we're at, check us out, FFTT-LLC.com. So I'm going to jump into questions. Hi, Michael. Does velocity matter, i.e. monetary asset versus fiscal income? I've seen a number of data series showing that monetary velocity is picking up. The challenge I always have with trying to discern what's really happening on that front is that the way it's calculated by the Fed, velocity is really just a plug number, and so to the extent that the Fed is pulling liquidity out of the system, that actually makes it look like the way that is calculated, makes it look like velocity is accelerating. When I'm not sure that that's actually the case, and that's something I always wrestle with, right? Because in theory, if velocity's picking up, you wouldn't see the slowing we're seeing across the U.S. and the global economy. So I'm not saying velocity doesn't matter. I think it matters greatly. What I'm saying is I think a lot of the metrics we see quoted as velocity I'm not convinced are that useful. So that's kind of where I stand there. Let's see. Hi Eric. What if the U.S. updates the value of its physical gold in its own vaults? How would that change the de-dollarization picture? I think it would depend on the context in which they did that. If they said they were starting to mark that to market quarterly or monthly like the EU or China does respectively, maybe there would be signaling there that I think would be important where you'd basically be saying that it would basically be, in my opinion, it would be an admission or a hint from the United States that they see as gold moving back into the system. I think it would be in line with the hint that the BIS dropped when they, under certain circumstances, are now counting gold as a 0% risk-weighted asset for capital purposes for banks under Basel III. So it's being treated like sovereign debt, which is a big change. That needs to be put in place no later than January 2022, but can start to be implemented now. So I think it would have important, to answer your question directly, I think it would have important signaling, important milestone from a signaling perspective, but not necessarily a huge shift. Hi Craig, market excited by Fed pause. What will it take for the Fed to commence its easing cycle? I think it's only a matter of time. The data, I think, is going to continue to soften just based on the lagged effect of the stronger dollar in 2018 and the interest rates hikes and QT. And so I think that the data is just going to have to get worse before they do that. And I don't think we're going to have to wait too long for that to happen. Hi Roger, can you explain the Shanghai Accord to the layperson? Sure. So the Shanghai Accord is it's a rumored mythical beast, if you will, along the lines of Bigfoot and the Loch Ness Monster, perhaps. At any rate, 2015, second half of the year in particular, you saw pronounced softening in global economic growth. China devalued, you had oil prices collapse, etc. Things were not good into the back half of 2015, and of course the Fed delayed a rate hike in September, but went through with the first one in whatever it was, 7, 8, 10 years in December of 2015. In early 2016, things went from bad to worse, and there was a G20 meeting in Shanghai in early February 2016. You started to see liquidity metrics change. You began to see the dollar soften. You saw a number of signals in markets suggesting that something was agreed to, but there was never anything officially said, anything in the communique to suggest it. But it came those symptoms collectively came to be believed or assumed that there was some sort of at least temporary agreement put in place at that G20 meeting in Shanghai, and that came to be known as the Shanghai Accord. Some people would tell you that nothing was agreed to, there is no such thing, and I wouldn't necessarily argue with them. It's more, like I said, sort of this mythical beast, if you will, where you can see a number of different asset markets react. Most notably, risk assets took off shortly thereafter. So let me see. Thoughts on the rumor that U.S. government shutdown is due to the inability to pay for 39 million food stamps? I think that's probably inaccurate. It would be my guess. I mean, the 39 million food stamps, it's a big number. It's a sad number. It's not that big a number in the grand scheme of things of the budget of the United States. If you look at what they spend the money on, you're looking at, call it $2 trillion on entitlements every year. You're looking at about 800 or 700 billion in interest expense gross, and you're looking at 800 billion in defense spending. And so you really look at 85% of U.S. government spending is driven by entitlements, defense, and interest. And so my guess is that's I do think there's possibly something more going on, but I don't think it's necessarily food stamps. Is the recent rise in palladium foretelling something comparable for gold? Hi, Mike. Possibly. Big difference, of course, is palladium is used in industrial applications. where it's used for catalytic converters, I believe, if I'm not mistaken, in cars, and so there's a practical implication there. Russia has historically, I believe, been a very big supplier, and so there may be some geopolitical hints there as well if the Russians are choking off supplies. I do think it could end up being a scenario where this is the kind of thing you could conceivably see as gold markets, if physical flows start to matter in ways we've talked about. But palladium is a bit different than gold. Gold isn't used for anything. Palladium is. Hello from Cleveland to Ireland. Thanks for listening in, Doug. Expect any more rate hikes? Not unless the dollar's weakened markedly. If the dollar stays here and moves higher, I think they are done with rate hikes for the time being. Sam, money has been pumped in to keep stock prices up. The short answer is there have been clear messages from the Fed that rising stocks are a good policy goal to be achieved, and a number of different Fed chair people have talked about that. So that's how I would phrase that. Do I expect the rally in risky assets to continue? Hi, Todor. I don't actually. I wish, it is what it is. I think we've had a very powerful counter rally unless the U.S. dollar is significantly weakened, either by trade agreement with China or some sort of New Plaza Accord. Unless the dollar's weakened markedly throughout 2019, I don't think the outlook for risky assets is very good at all. Let me see. Why does the U.S. government borrow a currency it can print? Why wouldn't it, I guess? No, I think ultimately there is a real reason behind there that people sort of don't talk about, which is, and it ties into some of this modern monetary theory ongoing discussion. I think there are rules. A lot of the academics would say, well, we can just print it and so we can do MMT. But even Professor Stephanie Kelton's big proponent of MMT, she is repeatedly on record saying deficits do matter. There is a level at which you just can't MMT everything. And so to me, why do they borrow a currency you can print? I think there are rules, and that that's part of the enforcement, I guess, of those rules. Let me see. Why are U.S. government tax receipts so important when the U.S. prints and borrows so much more? Again, I think it ties into these sort of sovereign debt. The United States has sort of been playing by a different set of rules than everybody else for a long time. That's our exorbitant privilege, as it was once called. But, big part of what we've been talking about in recent years, and certainly in the last, 18, 24 months, has been deficits are starting to matter for the U.S. again. And if that's the case, the U.S. is going to have to start playing by the rules that a lot of everybody else has been playing by for a long time. And so I think the U.S. isn't fully subject to those rules yet, but it's going from being not subject to them to being subject to them. We're somewhere between those 2 points. Hi, Eric. Why is Russia stocking up on gold? I think Russia's stocking up on gold for a couple reasons. I think, number one, it gives them flexibility for future potential sanctions. I think, number two, it gives them independence. It allows them to have greater control over their own FX reserves balance in terms of the ability to denominate their FX reserves using their biggest export. In other words, if Russia gets into real trouble, it can use oil to bid gold higher, and by bidding gold higher, they will make their FX reserve position more sustainable. And so it's an economic sovereignty, geopolitical sovereignty issue from the big picture, and from a small picture or from a tactical standpoint, it increases Russia's flexibility vis-a-vis potential U.S. sanctions. Bonjour to you as well. Let's see here. Trying to a couple more before I check out here. Trying to catch up. Thoughts on Professor Skidmore's discovery of additional $21 trillion to the U.S. national debt? You know, I've read a couple of those articles. I've looked at his work a bit. You know, I've started reading Matt Taibbi's article in Rolling Stone that was just out about this missing $21 trillion. It would be a bombshell. It would be important. I just haven't done enough digging at the actual math of it. This is not to say that they're wrong, but it would be very potentially important. I do know that there have been some changes, I believe, to government accounting standards recently, and that may be perhaps even more important on a go-forward basis rather than what we've spent in the past. But once you get to changing the accounting standards, that tends to be inflationary. We certainly saw that in April of 2009 with mark-to-market in the private sector. What about the yield curve? Perhaps long-term bond difficult to bid again. Let me try that again. What about the yield curve? Perhaps long-term bond difficult to get a bid. Yeah, I think if you look at the underlying fundamentals of U.S. Treasury auctions, what you see is that the United States is funding more and more of its debt with a more and more fickle investor base, which is to say the private sector, at shorter and shorter durations. And that is those are all things that are reducing flexibility for the U.S. government over time and increases the pressure ultimately, or brings forward the date where the Fed's going to have to bid for the long end of that curve, which is, I think, how this movie ends. But I think that movie ends. You know, I think we get to that part of the movie sooner than a lot of other people do. I think we're within 2 years of that. Let me see. Hi, Michael. A couple more here, and then I'm going to jump. Will we be hearing more about the PBGC in 2019-20? Possibly. It really, I don't want to oversimplify, but I do want to emphasize how important it is, which is if the dollar is not weakened significantly in 2019, however that happens, the outlook for risk assets, broadly speaking, is as ugly as I've seen in my career. And so under that scenario, yeah, you might start to hear about PBGC again like we did back in 07, 08, 09, except the demographics are worse and the positioning's worse, etc. So yeah, I wouldn't be surprised by that. So you're welcome, Eric. And let's see, some say China's stocking up the most on gold. Yeah, I think China, has been buying gold. They continue to buy gold. I think they, have bought a lot more than they've let on. You're welcome. Am I Republican or Democrat? I am independent. My political views are, if it makes sense, we should do what makes sense. So, at any rate, I am going to jump here for tonight. Hey, I appreciate everybody coming on. And like next week, we'll catch up again Sunday night. I hope everyone has a great week this week. And thank you again very much for joining me. And like I said, check us out, FFTT-LLC.com. If you haven't picked up the new book, it's right over here, Mr. X, having great reviews to that. So thanks again, everyone, for joining, and have a great night, everybody. Take care.